This week, the Federal Reserve did cut interest rates by 50 basis points. That's 0.5%. But they made it clear that future cuts are likely to be smaller. And while a lot of people expected mortgage rates to drop immediately after this Fed cut, that's not really how it works. Mortgage rates respond actually more slowly because a mix of things influence them. So rates should, though, start to decrease gradually over time as inflation comes down. And one thing to keep in mind is adjustable rate mortgages. ARMs might become a more affordable option soon because these loans typically adjust based on a rate called SOFR. And SOFR follows the Fed cuts, but it does lag by about 30 days. Totally separate housing inventory is still tight, even though there are more homes for sale compared to last year. The total number is well below pre-pandemic levels. And all this means is prices are likely to stay high because there just aren't enough homes to meet demand. And for homeowners, that's obviously good news. And in fact, the average homeowner saw home equity go up by about $25,000 over the last year, and here in San Diego, probably more than that. Going back a step, the market didn't react as strongly to the Fed's rate cut as a lot of people hoped. And while bonds did initially improve a bit, they eventually leveled out and basically left rates mostly unchanged for now. But we do expect to see rates continue to trend lower as we head into next week. We also got a look into what the Fed expects for the future, and they're predicting 2 more small rate cuts, probably 0.25% each by the end of the year, and then we'll see more cuts in 2025. The Fed's also expecting unemployment to go up a bit, and GDP, which measures the economy's health, is expected to slow down by about 1% this year. Next week, we're going to get more important updates like PCE, personal consumption expenditures, and that's the Fed's favorite measure of inflation. We're also going to get a second look at GDP for the second quarter. With the upcoming election, housing affordability has been a big issue. So both Kamala Harris and Donald Trump have proposed plans to address it, and I wanted to cover those real quick. Kamala Harris wants to build 3 million new homes by the end of her first term and also provide $25,000 in down payment assistance for first-time homebuyers. She's focused on working with builders to increase the supply of affordable homes and also provide tax incentives for new construction. Donald Trump wants to reduce regulations that make building new homes expensive and also open federal land for large-scale housing projects. And he believes cutting basically through the red tape and offering these tax breaks will lower the cost of housing. And Trump's also tied housing costs to immigration, suggesting that limiting illegal immigration could help lower housing costs. But both candidates are focusing on making homeownership more affordable for Americans, just with different strategies to tackle the housing crisis we have. Reach out with any questions in the meantime, but I'll be back with more news next Friday. Have a great day.